Hi, it's Bill Groves, the LA probate expert, with my weekly real estate market update. Interest rates rise again, fourth week in a row, almost to 4%, to the highest level since October 2019. What's this mean to the market and what's this mean to you? Let's get into this. So, interest rates have continued, and I've been saying this, I think, every single week, about a quarter percent. We're going from 2.75 to 3, from 3 to 3 and a quarter, 3 and a quarter, 3.5, 3.5 to 3.75, most recently, almost 4%. But let's take a look at it on an annualized basis or a longer term basis, and you can see what is so concerning. Look at over the last where are we at here? Look at over the last 5 years, interest rates. I'm sorry, in the last year, interest rates going up this constant trend. And just this year, from under 3% to 3.85%. Now, when you look at a 5 year basis, you can see that rates were coming down pre COVID. And it took the Fed to continue to flood the market with money and lower the interest rates to keep the market going. But now we're back to pre pandemic levels for the first time. And so the things that kept the market going during this pandemic period are no longer with us, the low interest rates. Now to see the market acting on its own. We had tremendous growth in values in the last year. Can that continue given these conditions? Well, that's what we're going to talk about today. So, why do housing prices not move with the same volatility as stock prices? If you follow the stock market, you see Facebook and major stocks change by up, down, 20% daily swings. Housing prices don't move as quickly because there's not the same number of transactions, not as liquid, not as fluid, but there's been pent up demand. And that whole period of dropping interest rates caused the value of houses to go up before sellers even sold them. And that's why you had multiple buyers looking to buy the properties. Now that's slowing down, but it's not stopping. And nationally, it's slowing down. And some markets, it is stopping and starting to reverse itself. What will that mean to the value of real estate overall? Well, one thing that's happened is our expected appreciation has come down. For the last few years, we've had double-digit appreciation. Here is the 10% mark, and you can see ever since 2021, we've been above that level. But now we're projecting that number to come down for the current year to 9.5%. Still a great investment. You know, you buy a house, put 20% down, borrow money at 4% for the other 80, and it goes up by 9%, you make money on the difference. But Corelogic is projecting by the end of the year the housing price rate increase to go down to 3.5%, below where mortgages will be. So this might be the last year or so we have of this run to buy property and have a finance at a rate that appreciation will outstrip. But you can definitely see that we had this long period of time where rates appreciated by 5% or so. This abnormal period during the COVID where I think everything has gone up in price, gasoline and foods and things. And now we're headed back down towards a more normal market. So what's that to mean if somebody wants to sell property? Well, again, because property isn't as fluid, doesn't move as quickly. But at the same time, in order for there to be downward pressure on prices, there has to be more houses. That's more supply at the same demand to cause prices to go down. And is that happening? Absolutely not. Take a look at the latest inventory data, 2022 from Terradatum. We have on the market right now 229,000 homes. A year ago, we had over 400,000. 2 years ago, we had over 670,000 homes for sale. And before that, over 700,000 or so. What you can see is there's hardly any homes for sale. The inventory is a third or a quarter of what's been historically. And as long as that's the case, maybe buyers will buy a bit less, but sellers just will simply choose not to sell. And so instead of prices dropping, you'll see the volume of transactions go down. Kind of like car sales and other retail sales. When there's less product on the shelves, there's less sales because there's less product to sell. And I think that's where we are overall in the marketplace. So what's this mean for you? Well, if you're looking to sell a property to buy something else, make sure you get that something else locked in. You might find yourself selling a house and then not being able to get the rate you want on your other side. Or if you're just going to sell a property, great time to do it now because it looks like the market's going to be slowing down a bit. Buyers, if you want to buy, great time if you can lock in a great rate. What you don't want to do is get locked in and find that rates go past 4% to 4.5% or 5%. Not projecting that, but you want to protect yourself from that risk. That's why more than ever, in a market where everything's going up, anybody can sell a property. But in a market like this, you need a professional. So if I can help you, call me, text me, email me. My contact info below. And don't ever forget, make today your best day ever. Thank you so much.